Wednesday, the 5th of August. I am Bosin Amafaye, and this is your Frontier opening bell for this day. Luke Ofojebe is the team lead equity research at Vertiva Capital Management. Good morning, Luke.
Good morning, Boatin.
Thank you so much. Ali Khan Sachu is the CEO and founder at Rich Frontiers Management in Nairobi. Thank you. It's good to see you again, Ali.
Good to see you too.
Thank you so much. And Ayode Jebro, who is the CEO and chartered trader at Afrinvest Securities in Lagos, Nigeria.
Good morning.
Great to have you, gentlemen. This conversation is very interesting about how life and workplace is changing during COVID-19. What are we learning right now? Let's just scratch over that first before we go to the market. Ali, what's your experience?
Well, actually, I find it much more productive. You know, I was taking an hour each way to the office. The traffic here is so stressful. It was stressing me out before I got to my desk. And frankly, you know, I'm finding it more cerebral and more productive. So telling me is this change is not going to be a temporary one. It's actually going to be a permanent behavioral change within organizations and individuals.
Interesting. You know, the British have what you call the home office. Now we all have the home office by ourselves. Interesting. I'm sure you're beginning to love the home office, by the way.
Yes, definitely. And it's when you also check even for productivity, and that's why you can even work for long hours. So most companies, even within the financial sector, they have begun to realize that you can actually still achieve a lot working from home. So for some of some superiors now, even their mindset, for those that allows people stay in the office and feel that is until you stay till like 10 p.m., 11 p.m. in the office before you can achieve stuff. They can actually see that without seeing your subordinates, you can still achieve. You don't have to be having that close monitoring. You delegate and you can still achieve results. So it's changing a lot of mindsets have been changed, and even operating costs. So when you look at the real estate, the impact we'll see is the real estate sector. So most people may reduce their office space because if you don't need as much people to come together in the office anymore. And you can even achieve more meetings. You know, for some of us in Lagos, you may not be able to attend more than 1 or 2 meetings in a whole day because of the traffic moving from island to mainland. But now, with that, you can use that time to even achieve as much as possible using most of the online devices.
Look, how's it at Vertiva Capital?
So working from home, really, I think it has structurally impacted businesses. So for services firms, working from home seems to be a very good alternative. It has really turned out well for a number of these services firms. I think one thing we can see clearly from their financial performance is that they've been able to tame operating expenses during this period, and that's really supporting the bottom line. I mean, you can see that for some companies, sales turnover are actually declining, but due to the fact that a number of them have been able to record significant improvement in operational efficiency, we've seen bottom line remaining resilient during this period. We've seen what the banks that have released so far. We've seen their financial performance. We've seen quite an impressive performance despite this COVID-19 crisis. So for the manufacturing firms, however, this has really impacted their supply chains. We've seen declines in demand from consumers, and that's really, in fact, affecting their turnover as well as their bottom line. So overall, I think working from home is something that a number of firms will have to look inward and see if they need to tweak their um, corporate culture going forward. So corporate culture is not something you just tweak within 2 or 6 months just because of the COVID-19 pandemic. You need to look at some external factors as well as key internal factors before you come to that realization. But we think with what we've seen so far since the start of the year, given the disruptions we've seen in supply chains all over the world, we think it will take more than 1.5 years for a number of companies to adjust to current realities. So going forward, you might see, like I said earlier, you might see a number of services firms adopting this work from home as the new normal. So you will see a large chunk of their labor strength working from home, and that has really turned out well for them. For the manufacturing firms, I do not think that's the approach they will be taking. I think when we've seen like a drastic drop in the COVID-19 spread in the country, a number of these workers will then start going back to their physical offices. And I think
sure,
that's what it will be for
I'm
them
sure,
going
look,
forward.
it's going to be a total change for everyone. And perhaps we need to begin to rewrite our productivity scripts at the fiscal level. Companies have to do it, governments have to do it. I don't have to go to the port to clear my goods. If I'm an importer, for example, I can do all the paperwork and just get a truck to go there. So we can actually become more efficient under the new normal of working from home. And I think it's a new thinking. 2020 will be a year for us to just experience it out. Then maybe we have a template for the new year to come. Let's go to the market very quickly, shall we? I checked through the second trading day of the week. Nigerian market kept its positive reading, 0.31%. The Ivorian market was much bigger in terms of the size, 1.68%. Egypt was up 0.2%, the first trading day after the holiday. Then you had Kenya down 1.12%. Ali will have a lot to tell me what's going on with the Nairobi securities market. South Africa GSE, 0.75%. Let's talk about East Africa a little bit, the East Coast, and then the NSE listed GADS posted 70 million net loss full year. But this morning we got news from the Central Bank of Kenya releasing some information. I'm sure Ali has that in his crosshairs. The Kenya Depository is unveiling securities lending and borrowing platform. We have securities lending framework within the Nigerian market already. The power plant, $5 billion is in Kenya. They're still continuing with that plant to improve energy efficiency and the power industry in the East Africa's largest market. Tanzania breweries, revenue down 5%. That's the story across the continent. And Uganda's BAT appointing a new managing director, Kirunda Magula. Ali, give us what's breaking here.
So let me start with the Nairobi Securities Exchange. We were one of the headlines in Bloomberg saying we're currently the worst performing stock market in Africa. The NSE 20 is at a 17-year low, and there's been significant underperformance, particularly in the banks, and the banks make up a huge section of the Nairobi Securities Exchange. The banks have restructured 1/3 of their loan book. And the concern here is they kicked the can down the road for 3 months. And the concern is that they're going to have to kick it down the road a little bit further. So this story broke on Bloomberg yesterday, caught a lot of people's attention. But, you know, it has been a very tough time. The issue here is half of the market cap is Safaricom. And Safaricom has been rolling over. They estimated the loss of $190 million related to the Central Bank of Kenya's edict that money transfers of less than $10 were to be free in this pandemic period. And that therefore has, Safaricom is warning, is going to hurt their bottom line. That's about just shy of 10% of total revenue. So it's pretty material. And that's also softened up the stock exchange. The central bank you were touching on came out with their sort of market conditions report. It was actually reasonably optimistic, talking about the opening up, talking about inflation being well anchored, talking about the improvement in the current account deficit, which is a phenomenon we're seeing across many emerging and frontier economies because imports have slowed down in effect. So overall, a more constructive picture than you might have guessed from the stock exchange. With respect to your headlines, EGAD is a pure play coffee producer. It's small, but it's an interesting insight into the coffee market. Here in the first half of that reporting period, we had a drought. Therefore, production out of EGAD was down from about 400 tons to 140 tons. And bear in mind, in that reporting period, we had very weak coffee prices on global exchanges, more than a decade low. So it was a bit of a double whammy. And that's why they've reported a net loss of 70 million, having previously reported a profit. The Kenya Depositories CDSC is starting a securities lending program. This is in line with market reforms. Historically, you have not been able to short shares at the stock exchange, but the stock exchange has made the decision to allow people to do that and for institutions to earn incremental income from lending out their shares. This nuclear agency story is an interesting one. $5 billion plant to power industry. Look, at the moment, we've got surplus energy. We're one of the few African countries who've actually been quite progressive in bringing on power, particularly in the renewable space. Lake Turkana wind power, geothermal is a big thing. And I just don't see where the demand is for the foreseeable future for such a big project. So I think that's more a headline grabber than a real deal kind of thing. And I think that's the impression I took away. Tanzania breweries revenue drops 5%. This is an interesting number. The Economist about 2 weeks ago was saying that if you look at beer consumption and you compare Tanzania's GDP print, they don't reconcile. The GDP looks too high for the beer consumption. They're looking at that correlation. So it's interesting that breweries was a little bit softer, single digits, not too bad. And then Uganda BAT has appointed a new MD and executive director. BAT, one of the premier dividend-paying stocks in East Africa. BAT Kenya pays out about 96% of its earnings per share and tends to track money market rates more than anything. So that's the wrap from East Africa. Shilling coming back to an all-time low, 107.95, and looks a little bit soft to me.
Yeah, great. Okay, but again, Ali, just a second, let's run through the Nigerian market a little bit. UBA, one of Nigeria's biggest lenders, yesterday spoke about the $200 million they're pushing into the 1.5 billion NPDC energy deal. NACO Aviation airports were closed second quarter, so it's no brainer that this company came in with a loss after tax, 143 million naira. Republic Bank of Ghana says its PAT up 180.6% in 2019. Oh, that's a backward-looking information, by the way. Ghana also suspends its 5% fiscal deficit GDP rule for the year 2020. Let us get into some of the earnings that are on the street and what the headline is for Ayode Jebo at Afrinvest Securities.
Yeah, thanks, Watson. Starting with the UBA story on its support for the upstream oil and gas sector, about $200 million. But based on the news that it was provided in Naira, so that potential exchange rate risk may be taken care of, and I think the repayment would be in dollars. So I think that's a good one for UBA. It's part of the UBA is the lead arranger of a consortium of Nigerian and international bank trying to structure a facility of about $1.5 billion pre-export and finance facility for NMPC. And this, which will be done in two tranches. I think the first tranche is about $1 billion, which will be repaid over the next 5 years. So I think this one opportunity that I feel it's also a way of supporting the government. So it's not only trying to raise finance through bonds, raise finance through from the international market through Eurobond to support some of these initiatives. So I believe this is also going to be positive for United Bank of Africa. Some of the other banks that are involved, the Standard Chartered Bank, Afrexim, Union Bank, and the trading oil companies, Vitol and Matrix. So I believe this will be positive. Also, now going to some of the results that have been published. You spoke about NAPO, so it's expected, because when you check the direct line, or in terms of how they make their revenue, the airports have just been opened. So we believe that things will pick up in Q3 and Q4 respectively. But based on expectation, we can see that if you look at most of the results that have been published so far, our expectation is that for most companies would see that negative impact of COVID-19 pandemic. But we've seen that largely, you can say maybe a 60 to 40 for most of them have been positive, surprising, starting from industrial goods sector, looking at the telecom sector and agri sector. You can see that the results have been very impressive. Even within the banking space, it's not been all gloom. And we can see that positive. For some of them, they've been able to take advantage of the shift in interest rate environment by booking capital gains. Yields fell significantly, and that has also provided support. You can also see the fees and commission from some of the banks, which you can attribute to the lockdown or the partial lockdown. So more people are adopting the use of the online channel. Union Bank, for instance, registered over 97% of its transaction on the online platform, compared to about 57% last year. So it's also providing that support, and maybe with also the restructuring forbearances that they also gave, though it would lower their interest income, but that also tried to minimize the impairment charges that would have also been booked on some of those loans. So by and large, that sentiment is impacting on, you can see the market closed up on Monday, closed up on Tuesday, and we're also expecting the top banks, GT Bank, Zenith, and Access Bank, to also pay interim dividend, which is positive for our market.
I'm interested. Thank you. I love the earnings. One particular sector earnings I want to look to give us about a minute's view on is the agro-allied. We saw Okomu Oil, now we've seen Presco, that despite the lockdown, it looks like the agro-allied services industry, they are benefiting from some of the policy actions of the government of last year.
Yeah, so Boateng, like you said, we've seen better than expected performance from these two companies. That's Okomu and Presco. We saw 2-digit growth in their top line. We also saw significant improvement in gross margins. We saw gross margin improving to about 87% for Okomu Oil and 63% for Presco. I mean, so as regards the growth we saw in top line, that was mainly driven by the closure of land borders. So demand for palm oil has been channeled to local producers, and in this case, mainly Presco and Okomu Oil. That was why we saw the 2-digit growth in top line for these two companies. More so, these two companies are not in their planting season at the moment, because you could see that we saw significant improvement in gross margins. So their planting season would be sometime around Q4, late Q3 and mid Q4. So that's when we've seen the company reporting higher growth in cost of sales. So we expect gross margin to decline during that period. So for full year, we definitely expect gross margin to come in lower than what we've seen in the first half of the year. But nonetheless, we expect better results in 2020 compared to what we saw in 2019, and that's mainly driven by land border closure. More so, the two firms have been able to record gains from FX positions. We've seen FX revaluation gains also supporting their performance during this period, and we think that might be the case for the rest of the year. And then, as regards sentiment in the equity market, we need to highlight the fact that the overall sentiment in the equity market right now is negative, and that's a reflection of the unimpressive macroeconomic fundamentals. I mean, the Nigerian economy is expected to contract, mainly due to the impact of COVID-19 on different sectors of the economy. So we've seen sentiment being negative in the equity market. However, given the better than expected results we've seen so far, we think some investors might just want to take advantage of these cheap valuations in some of these stocks, especially the agro-allied companies that you mentioned, and we might see positive movement in these stocks in the next couple of weeks. Thank you.
The bit of divergence here, the numbers are coming a little bit good, positive from the listed companies, but the macroeconomic environment has a lot of a topsy-turvy. How investors would navigate that is anyone's guess. Let's talk about Southern Africa very quickly, and then as we have a few minutes left on the show, the South African rand is in play, but the stories from the breweries across Africa is sounding exactly the same. South Africa Breweries is cancelling 5 billion rand investment plans over the alcohol ban. Then, of course, we have the Zimbabwe's new stock exchange, the Victoria Falls, called VFEX. Yesterday published a new exchange control regulations. So, Ali, what's your top stories here for just a minute?
Let me quickly start with the rand. We've seen some softening up in the dollar rand. The rand was last around 17.34, having had a 16 handle a few sessions ago. And I think we're now on a declining trend for the rand. The low for the year had a 19 handle, and I think personally over time that's where we're headed. Let me touch on SAB cancelling 5 billion rand investment plans over alcohol sales ban. It's been a very, very tough time for alcohol sellers across the continent. East African breweries, majority owned by Diageo here in East Africa, reported a second half loss. It was only because the first half was strong that they managed to post a full year net gain. So we know the lockdown has hit people hard. We know bars are not selling as much as they were before. And I think in South Africa, this is a consequence of that decision. In South Africa, particularly, the drinking culture puts a lot of pressure on the hospital and healthcare, and therefore the decision to cut drinking is to reduce the pressure on the healthcare system in South Africa. So until you see numbers ease up, I don't see President Ramaphosa easing up on these beverage sellers. Cash Build SA to purchase Pepkor. This is home building. I remember being in South Africa and visiting a Cash Build. You want to buy your tiles, it's all under one roof. You can buy whatever. It's a very interesting business. Obviously, this is a bit of vertical integration, and that's an interesting development. Finally, let me touch on Zimbabwe. Look, politically, this is a very fragile situation now. The very famous lady writer who's on the shortlist for the Booker Prize was picked up by the police a couple of days ago. There's a lot of argument on the streets, but this is the decision basically where they've taken Old Mutual in particular off the Zimbabwe Stock Exchange and are trying to park them on this Victoria Falls exchange as currency issue. So we
That's
have to,
building, that's setting up a whole stock exchange practically for just one company.
that's absolutely
That's the big elephant in the room. That's a big elephant in the room. I think it's going down in history. I haven't seen it anywhere in the world where one single company got so much muscle to get his own stock exchange where it's going to be the king and just say, look, just put you in a park, as it were, and then you can be in the world of your own, just with a few other surrounding you. Thank you very much, everyone. And let's touch on North Africa very quickly, just give you the headlines, and then we wrap up the program for this Wednesday. Egyptian authorities reporting food exports 2.2% in the first half of the year. B Investment Holdings is talking exit of 20% stake in a total of Egypt. Centamin profit surged to 21%. Pre-tax profit, very big numbers there from some of the companies. And Bank of Africa is raising capital by allowing investors or shareholders to convert their dividend in full or in part to meet regulatory requirements and shore up its liquidity. That's about it all for today. Thank you very much, Ali Kansachu in Nairobi. Thank you very much for being on the show. Ayode Jebo from Afrinvest Securities, and of course, Luke Ofojebe from Vertical Capital here in Lagos. Thank you very much. Have a great Wednesday.